Welcome back, everybody. This is Wells Minter, a Forex trader and your educator. I created this whole platform to help people just like you to learn how to trade the Forex market. So, welcome, welcome, welcome. If that's you, if you're a beginner or someone who's intermediate, or even a pro, you probably get some pointers from me. I don't know. You be the judge of that. But I have a lot of resources on my website. I have a lot of I've created different ways you can contact with me. I encourage you to plug in to what I have going on as far as getting some of this knowledge. Let me share what I've learned with you in a simple fashion. So there's different ways to do that, right? There's different ways for me to get the information out to you. Number one, through my YouTube channel, but I also have different platforms that you guys can participate in or join or be a member of. And you can find all that information on my website. This is my website at metrofxtraders.com. I'm the owner and operator of this website, and there's a lot of resources here. Okay, and if you want to, get access to me, number one, you could read my bios on the page, but you can email me at fxtraders@gmail.com. Um, all right, this is my disclaimer. There's no guarantee of you ever earning any money, or the only guarantee is that you won't make any money if you quit. All right, but if you go here, you can see my Facebook group is here, my Telegram group is here, my YouTube channel is here. Okay, and just to show you what I got going on, the Facebook group has 238 members in it. If you're part of the Facebook group, I thank you for being a member. I also have a private Facebook chat. There's about, I think, 40 plus people in this chat. And every time I send out screenshots of my trades. I answer questions. If you have questions, you put it in the chat. So reach out to me if you want to be part of the chat, and we get the information firsthand from me. I also make announcements here when I do the trainings, right? 7 minutes before the Forex Bootcamp training, like this one. I put it in here, and everybody that's part of the chat can click on the link and go directly to the Zoom training, and you can watch it live. Okay, so that's the Facebook group. So my YouTube channel, of course, is called Metro FX Traders. I have 655 subscribers. If this is the first time you're watching my video, subscribe, 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 and hit the bell button the way you get notifications of future videos. And I thank all of my subscribers for being a subscriber. I appreciate you guys. Thank you so much for the positive comments. Thank you so much for sharing my videos with your colleagues and your friends. It means a lot. But before you go and after you watch a video, please, please, please give a thumbs up if you will. That way it helps with, me getting out there to the masses. That way I could become a household name, right? Um, so definitely subscribe to the YouTube channel. So before I jump into some content, okay, today's training is going to be pretty much about patterns, okay, how to identify candle patterns. So let me just jump into a live market right here. This is Bitcoin. And of course, you're going to need, well, what do you need to start to get trading? You guys probably already know, but you're going to need a trading platform, right? A broker. You're going to need, and all that's on my website, by the way. Excuse me. You're going to need a broker. You're going to need a demo account to practice on. You're going to need this charting platform through TradingView. Okay, there's a link on my website to get access to this platform. Okay, so where you can market your charts, you can start, some technical analysis. That way, you know exactly what's going on in the market. Because without this, you really can't really have the wherewithal of what the market's doing, right? The great thing about the market, the financial market, that is, you can make money going up and you can make money going down. What do I mean? Well, you can place a trade with your analysis. You can try to predict the market's going to go up and hit a certain number. And then once it hits that certain number, you will make a profit. But you can also sell the market, okay? Meaning you can predict or try to predict through your analysis that the market's going to tank or drop to a certain level, okay? And if you're right, you'll make money under that assumption, under that trade. So the great thing about the market is, um, if you're trading the Forex market, it's open pretty much 6 days a week, starting on Sunday, close on Friday. But if you're trading cryptocurrency, it's pretty much available 24/7, 7 days a week. All right. So you can literally sit at your desk, at your computer, with your trading platform, place a trade, and walk away with anywhere from $5 to thousands of dollars. And you've seen some of the gurus out there who are making millions trading the market. That's because they know what they're doing. They have a trading plan. That's what you're going to learn from me, is how to create a trading plan. And they execute that plan. Okay. It's like a team has a playbook. Okay. Whatever your favorite team is, whether it's any type of sport for that matter, there is a playbook that they go by. Whether you're playing defense or offense, you go by the playbook. You don't try to make up a play at the last second. No, you follow your playbook. And when certain things happen, you execute the play, right? If nothing happens, you don't execute the play. Same with trading. If you have a trading plan, and your trading plan is do this, and this, and none of that stuff has happened to tell you, to give you an indication that you should do these things, you don't take the trade. Okay. Now, if certain things happen based on your trading plans, that's when you place the trade. You pull the trigger. Okay. And that's what you're gonna learn from me. It's like, how do you analyze? How do I analyze? I'll share that with you, and then you'll practice what I've done for myself. You try to implement it with what you're doing, right? Because trading is a big puzzle. You're gonna get there's a lot of pieces, and you get a piece from everybody that actually is an educator, right? You get a piece from this guy, this guy, this gal, and you try to plug those pieces into your puzzle. Okay, so you'll have your favorite educators. You'll subscribe to their channel, follow what they say. If you enjoy what I have put out there, subscribe, come back often, rewatch, because the more you rewatch a video, the more it sinks in. Okay, I love to use this analogy. It's like, okay, you heard a song maybe 2, 3 years ago that one of your favorite songs, right? But 2, 3 years have passed. You listen to the radio, and all of a sudden that song comes on. All of a sudden, you're singing with that song. You're singing the lyrics. You're grooving with the sound, and so on and so forth. And when the song is over, you're like, wow, I knew every word of that song without skipping a beat. Why? That's because repetition. You played that song so many times 2, 3 years ago that you memorize subconsciously the lyrics of that song. Okay, so now whenever that song comes on, and if it comes 2, 3 years down the road, the lyrics of that song because that's one of your favorites. So this is no different. Okay, so if you practice, 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 reapply what you learned, and you put it into memory, and you understand what you're doing, when certain things happen, you're going to execute based on your memory, right? And how do you build that muscle? Well, again, you build that muscle with practice. Perfect practice makes perfect trades. Okay. But there's things on this chart that you truly need to comprehend. You need to understand the terminology. You need to understand what these candles stand for. You need to understand that these little lines that are sticking out of the candles are called wicks. Okay. You need to understand what these wicks mean. Okay. You need to understand the autonomy of a candle. You need to break that down. Okay. A bullish candle, okay, which is a blue candle on my chart. Okay. You have to understand that a bullish candle opens up. I'm going to show you here real quick. Let's just, take one of these candles here. Okay. A bullish candle, right? A candle for that matter. An up candle, a blue candle, a candle that says the market's going higher, it's pushing higher, so on and so forth. You need to understand that this one particular candle has an open and close. Okay. It opens down here. It pulls back down to hit the low of the day. Excuse me. Depending what time frame you're looking at, right? There's different time frames within the market. So I always start with a higher time frame. and go down to the lower time frame before I execute my trade. So my higher time frame is telling me the momentum of the market, whether it's going up or down. So that's the first thing I need to do is try to find out whether I'm in an uptrend or a downtrend. But go back to the candle, the autonomy of the candle. Candle opens up here, it goes down, make a low of the day, shoots all the way up, makes a wick. You see that little thing that's sticking out of the candle? Makes a wick telling you that was the high of the day, and then comes back and closes right here. Okay. And the reverse is true with a black candle, which is a down candle, right? The candle opens up here, okay? It pulls all the way up here to make the low of the day and pulls all the way down here to make the high of that low, right? To make a lower high and then closes right here, okay? So that's the very first thing you need to understand, the autonomy of the candle, okay? What goes on within this candle? There's a lot of buying and selling within this candle, but if it's a solid black candle, you have a lot of selling, right? People selling, 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 selling. When you have a blue candle, and it's a big thick candle like these guys over here, there's a lot of buying, 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 buying. So these people are pushing the market up. These people are pushing the market down. Those who are pushing the market up, the rule of thumb is you buy low, like you get in over here, and you sell on top so they can make a profit. So they can make a profit on all this momentum. Same is true on the candle goes down, making a downtrend. They actually would, sell it up here, meaning they own it at that level, and then all of a sudden, when it comes on this point, they close their trade and just try to take more, make profit based on the momentum of the candle going down. Okay, so that's how we as traders make money. We make money, trying to predict this trend right here, all right, and then trying to predict that there's going to be a reversal or right here. Okay, but we go with the trend, meaning you always place your trade based on the trend. So you don't want to counter trend too much, okay, unless you know what you're doing. Meaning if the counter trend is going down, okay, but you want to go with the uptrend. So if you've analyzed the charts and you say, okay, the trend is an uptrend this particular hour, this particular 4 hour, this day, this week, you want to place trades based on that trend. Go with the trend. It's like if you're a surfer, okay, you see the surf coming, the water coming behind you. You start to paddle fast. That way you can jump on your surfboard and catch the wave going down. Okay, because you're on top of the wave, right? And you're surfing, trying to balance yourself to make sure you don't fall, but then you're enjoying the ride going down with a skill set, right? Because there's a skill set with surfing. You got to know where to put your feet. You got to know how to balance yourself. You got to know how to swim. That's the most important part of surfing, right? You got to know how to dodge your surfboard in case it tries to hit you and so on and so forth. So I say that to say this, that there's a skill set here as well. Okay. So you go with the trend. Okay. You place your trades based on the trend. Okay. Now, um, there's market structure. Okay. And structures can change. Okay. Because an uptrend is an uptrend. And then a downtrend, it could change the structure of this market right here. And if it goes down a certain level, it could pretty much reverse and go down. Okay, so you're gonna need to learn how to do that, how to analyze that. Like when can that happen? So you gotta learn exactly that how to profit from a trending market that may reverse to a downtrend or reverse to an uptrend. Okay, so that might sound like a lot. It might sound complicated, but it's not. It's not. It's not. Um, because there's institutional traders, there's bankers, there's people who work for financial institutions, okay, who've actually went to college, right, and got like a 4 year degree, and had to interview for a position to get the job, and all of a sudden they're analyzers, they're traders, and so on and so forth. And guess what? They're in and they're making money for the bank. They're making money for that financial institution. Right? They have quotas, they have goals. They have to help the bank make money, and at the same time, when they help the bank make money, they get a bonus if they do really well based on their analysis, on their predictions of the market. Okay. But us, we're called retail traders. As a retail trader, you know, when you think you could move the market with your trade, no, there's billions of dollars being generated in one candle, in one trend, in the whole cycle of trading. Okay. And trading is just about, you know, predicting the market, and you're trying to grow your money. Okay. Trying to be a bank, so to speak. So this can be a profession if you want to be. Don't treat it as a hobby, because once you do that, you're not going to be serious. But if you treat it as a profession and you're serious about this trade, and you come to work, meaning you come to read the chart, this is your job. You want to be really good at your job, right? Because you're going to be your own boss. You're going to set your own time. You're going to invest your own money. You're going to try to grow that money. Okay. But guess what? You're your own boss. Nobody can fire you. Nobody can tell you that you're late. Nobody can tell you when to take lunch, or when, even if you're, hungry or not hungry, whatever. There's no overseer, no person over your shoulder dictating to you how much money you should make them. Okay. And when you take ownership of becoming a full-time or even a part-time trader, you take ownership, true ownership, you can write your own paycheck. Excuse me. You can write your own paycheck. You can invest $10 and grow to 20 bucks based on a skill set. You can invest $50 and grow to $100 based on a skill set. But you can also lose, right? You can also lose and make a bad investment, or place a trade that goes against you or hits your stop loss. So you need to learn how to avoid these things. And when that happens, if you take the emotion out of it, okay, psychologically, you take the emotion out of it, you actually anticipate that happening. You anticipate that happening because it's going to happen. You're going to have down days. You're going to have winning days, losing days. You're going to wonder what happened, because when you make your prediction, the market is not going to honor your prediction. You're not going to say, "Come on, go up, market." It's not going to listen to you. Okay, because it's market makers behind the screens who are pulling the trigger, and they have goals too. Okay, their goal is to get your stop loss, hunt for your stop loss, so they can make money. They want to collect all the money that's on the table, like in a casino. You pick the wrong number, guess what? The guy with the long arm, the stick there, he collects everybody's chips and it goes to the house. The same thing is happening here. They're saying, okay, we know that there's inexperienced traders out there who's going to place trades based on this. And we need to drop the market, collect their stop losses, and we can make money. But you, as a skilled professional, need to be aware of these traps, right? You need to avoid these traps, right? That way they don't collect your money. They don't hit your stop loss. Okay. Now, but you got to also outsmart the fox, right? You got to also outsmart the fox. You got to set, take profit levels. You got to say, okay, if the market dips here, I get in over here, I want to get out right here. Okay. Now, this is a strategy, is buying in the dip. Okay, because as you're looking at a dip here, right? You're buying in a dip based on what you see in the dip. You already know it's an uptrend, but it's going to retrace and come back, right? And when it does that retrace, you're going to buy here and then hopefully sell here. Okay. So, but how do you do that? How do you anticipate that? What is going on in these candles that can help you make that prediction? And that's what we're going to talk about today. Okay. We're going to talk about patterns. We're going to talk about what to look for in the market. That way you could put it in your notes there. Because what I learned, what I'm about to share with you guys, I got flat out excited. And let me pull that information up here. Share it with you guys. Right. I'm just going to pull up my notes here. Hold on. I realize I closed out the file before I started the recording. So let me do this here. pull up my notes because on my website, well, on my YouTube channel, there's an audio version of a book called The Candlestick Bible. Okay, you need to learn the language. You need to learn how to read these candles, and it speaks its own language. It's like if you listening to me in English, you probably speak a second or third language, right? In order for me to speak to you in your language, I need to learn the language, right? Like right now, I'm learning Spanish. Um, I'm also trying to be a fluent French speaker. Je parle français un peu, habla un poquito español. So that's my extent of my learning, right? But there's words that I'm learning, right, to build my vocabulary. I'm also learning how to speak German because I love languages. So as a person who loves languages, you know, you have to, be committed and you have to um, repetition, a lot of repetition in learning how to speak a language. So in my German language learning, I learned certain words, right? Like Wasser, that's water. Like Bier oder Wasser, beer or water, right? Um, Wie geht's means how are you? Truce means goodbye. Um, you know, how about um, Wasser bitte, water please. So there's certain words that I had to practice and learn in order to try to become fluent in that language. Same is true with French. Okay, parler un peu de français, you know. But you guys are not here for language learning class. But I'm just sharing that with you to let you know that hey, within life, if you want to, become proficient in anything, you got to practice. You got to practice. You got to practice. So let's dive into the file. Okay, so I just pulled up the file. Okay, so first thing we're gonna study here is the bullish engulfing candle. Okay, so the bullish engulfing candle, if we're looking at this chart, and we're gonna stay on the 4 minute um, time frame. Okay, so I want you guys to pause the video and tell me which one of these candles would be considered a bullish candle. Okay, a bullish engulfing candle. Okay, so you're like saying, okay, what is a bullish engulfing candle? Okay, a bullish engulfing candle. I'm trying to draw it out here. Okay, you have this candle right here. Okay, which is a black candle, and then the candle next to it, very next candle. If we clone this, and it's a little bigger. Okay, this is a black candle. We're gonna make this one a green candle. Okay, so these two candles, when this happens, you see this candle is bigger than this candle. Okay, that's called a bullish engulfing candle. Okay, which basically is a reversal candle. Okay, because you had candles that was going down. Okay, like so. Like one more. You had candles that was going down. So you were down, a reverse, right? Candles going down, right? And all of a sudden you see this candle. This candle is telling you one thing. It's telling you that, hey, now that the sellers were pushing the market down, the buyers stepped in, caused this huge green candle to happen. And when this candle happened, basically, you should anticipate the market going up, which is a reversal candle. Okay, so we're going to clone this candle again here. Okay. And something like this should happen. Um, Different sizes, so on and so forth. But when you see that bullish candle, you anticipate the market going up like this. Okay. But this one candle, we're told, gave you a hint that there's a reversal that's about to happen. And usually this happens down on a downtrend. Okay. When the downtrend has exhausted its trend going lower, you see this candle happening. Okay, you can anticipate an uptrend. Now it could reverse on you on the drop of a dime, but at least you know that once this candle closes, okay, you can literally place your trade right when this candle closes, right here. Set your stop loss, and this is really valuable, so take notes. Set your stop loss below the candle. It's like down here. This is your stop loss area. Okay. And you're going to set your TP, your take profit, above. Okay. So if you got in here, this is where you place the order. Okay. And you want to get out of the trade right here for profit. So all of this is profit. But if the trade reverses and goes the opposite direction and stop you out, okay, you didn't blow your account. That's why it's really important to place a stop loss, right? But if the market continues to go up, you can pretty much bank all of this money right here, okay? Between your entry and your take profit is your profit, okay? Now, some traders, once they see that the market's going in their favor, they'll move their stop loss to the point where they entered, which is break even. That's called break even. Once they move their stop loss right here, okay, if the market reverses and hits this line, they didn't lose any money. Okay, it's called break even. Okay, so but you got to give the market an opportunity to breathe before you do that. Okay, because you want to get in the market for a ratio of 1 to 2 or 1 to 3. So the amount of money you put in that trade, you want to try to double it or triple it. Okay, or 1 to 4 or 1 to 5, so on and so forth. That's based on ratios, right? You want to be a ratio type of trader. You don't want to get into a trade and try to hope for it to get to your take profit. No, you want to calculate that if the market can get to this point based on looking left, right? If you look left and you see a point where a point of interest, and I'm going to show you exactly what that means. A point of interest is like over here. There's a lot of traders during this point of interest in this area right here. So let's mark that out. If you look left, there's a point of interest, right? There's a point of interest. So you're looking down here, and what do you see? Okay. If I was to open this up, now this is where the practice comes in, right? You see this candle right here is bigger than this candle right here, right? Based on my illustration, you already have a downward trend right here, okay? And all of a sudden, it's exhausted. It's like, okay, the sellers can't sell anymore. These are the black candles, okay? And then you see this candle right here, which is bigger than the black candle before it. You mark this as a bullish engulfing candle. Okay, so what you do is you anticipate the market reversing, going up, just like I illustrated. And again, where would you enter? You enter at the close of this candle, right? You enter the close of this candle. Where do you set your stop loss? I think you guys are getting it. You set it below here, right? Give it some wiggle room, make sure you give it some wiggle room. So you might want to place it below this line or at this line and just give this pretty much some wiggle room. Okay. That way, you give yourself some space. This is called wiggle room. All right. All right. So this is your stop loss area, right? Your TP, you're going to use a tool. Okay. Well, what did I say before? You look left. You look left. So your TP should be at this area where there's a lot of activity going on, a point of interest, right? So that's where your TP should be. So you're going to use this tool called the long position tool. So you entered here from that red line. You set your stop loss down here. All right. And this is before all of this stuff in the right happened. All right. So you entered there and you stretch it all the way up to the top here to anticipate it coming in this general area. Right. And this is a ratio of a 1 to 3.81%. Okay. And you're saying to the market that, hey, I'm going to set and forget this trade. I'm going to place this trade right here. And if the market can get to this level, I can profit from, you know, my trade. Okay. And what happens? If you stretch this out all the way over here, you notice the market did get to this level and gave you the profit that you were seeking. That's a winning trade. That's how you should plan your trades, execute your trades in this fashion. Okay. Now, that's just one candlestick strategy. Okay. That's why I encourage you to go to my website and look for that video that I put up on here, on there, on the audio book of the Candlestick Bible strategy. Okay. Because when you see this in the near future, okay, when you see this in the future, you'll always see it now because you're going to train your eye to look for a blue candle that's bigger than the candle before it. And bullish engulfing, it's called bullish engulfing. Bullish meaning is the bulls are taking over the bears. So black candles we call them bears, blue candles we call them bulls. So the bulls are taking over the bears, and you're trying to profit based on this strategy right here. So practice this, okay? Because next week I'm going to show you another pattern. But this is just a pattern. And again, you're going to go and do some back testing. You're going to go and look for that candle whenever you see the market at the bottom. You're going to go to the bottom of the market and see if you can find, right, a candle that's bigger than the candle before it. But remember, it's got to be at the bottom of a trend, like right here. Okay. So that's how you back test. Okay. You go to historical data and you look left and you just mark out the strategy on your chart. Okay. Because here, remember, it's going to be a downtrend with a candle, a bullish engulfing candle. Remember, this blue candle is bigger than the candle before it. Okay. And where would you place your trade? Right at the close of the candle. Where are you going to place your stop loss? At the bottom. Okay. Below these wicks. Give yourself some wiggle room. Okay. And as you can see, once you place your stop loss, you're going to now try to predict, okay, with this tool, a ratio, a long position You got in here. Now this is where you have to decide, what do you want? Okay, because your stop loss is down here. Do you want a 1 to 2? Do you want a 1 to 3? If you want a 1 to 2 and stop here, you just wait, right? You set and forget it, and you wait. Because now you want to just see if it's going to hit. Is it going to hit? Is it going to hit? So, yeah, it's going to hit because the market was trending higher. And look what happened right here. On the right side is where you actually profit from setting that trade. As you can see right here. Okay. So that was pretty much a 1 to 2. Now, that's just pretty much you just doubled your investment. So if you place $100 trade, you made $200, but you risked $100. Okay, so when you risk that $100, you want to grow that $100 to 200. Okay, understand the risk factor here because this is a 1 to 2. Okay, if you wanted to do a 1 to 3, now let's see, 1 to 3, 1 to 3. Let's take a look. Hold on. Okay, so if you want a 1 to 3, right? You can do this. Let's say it's a 1 to 3. All right, let's see if the market actually gave you that profit on a 1 to 3. So I'm going to go right, and there it is. Pretty much, if you were to put your line on top of there, there's your profit right there. Now, these are all 4-hour candles, right? So when you look at 4-hour candles, there's a tool here that'll tell you how long it took or how many days it took to get to that level. But guess what? And we can actually use that tool. Hold on. Close this out. It's a tool, date range, right? You take that tool, you place it on your line, and you put it up here. It's saying that it took 2 days, right? Approximately 2 days that you had to stay in this trade in order to profit from the trade. 2 days. Okay. So great thing about this trade, once you have placed this trade, it never came down to hit your stop loss. How awesome is that? Okay. It never came down in this area. Now, did it eventually come down to that area? Maybe in the future, but it profited you out before you actually came down to the zone. Okay. That's why we set a stop loss. And that's why you set your ratios. Okay. So that is a winning trade, right? Now, will it always go in your favor? No. It won't go in your favor more often than not. You just got to be prepared to understand what you're looking at, right? So that's your homework assignment. Your homework assignment is to go on a chart, look left, right? Go through some historical data and try to find your bullish engulfing candles. Okay. And I didn't have to go that far to find another one. Okay. Now, if this was your only strategy on your trading plan, is to wait for bullish engulfing candles, then that's a strategy that you can implement, right? And use it as a formula for success. All right. But you got to be patient because you got to wait for this trend to exhaust. And there's another candle right there. I'm going to make it so big that you can see it. This candle is bigger than the candle previous. Bullish engulfing candle. You place your trade where? At the top of the candle, which is at the close, right? You place your stop loss where? You place it below these wicks here. You give it some wiggle room in case it wants to go a little bit further down. Now, this is your stop loss. This is the area that if it goes against you, it stops you out, but you're protecting your principal. That's why you set stop losses, right? And now you say to yourself, all right, how much do I want to make on this trade? So you take out your tool, which is your long position tool. You set it at your entry. You stretch it down to your stop loss. And you might say, okay, I just want maybe a 1-to-1. That's it. Hit right there, 1-to-1. Or if you want a little bit more, because these areas right here are areas of interest. Okay, they could be your pivot points. Okay, because the market went to this area of interest, then you can say it's take profit one, take profit two, take profit three. Okay, so if you put more than one trade in, you can say, okay, once it gets here, I'll take my profit. Once it gets there, I'll take my profit. But let's see, we look left, if it hits take profit two, which it did, and then if we do a 1-to-2, all right, I'm going to stretch this line out so you can see it. You're going to go right, and boom, you got your profit. And again, it never came down to hit your stop loss. Okay, so I'm going to leave the training at that. I'll stop right here because you need to practice this. Practice your eye to see this candle. You go practice on trading view to use these tools. Okay, you got your tools on your left panel here. Okay, the tool I use, they're starred. The horizontal ray. Okay, when you star it, it becomes part of your panel up here. So that's a horizontal ray to make these lines, right? The other tool I use is the long position. Okay, and next week we'll talk about the reverse on a downtrend. Okay, what to look for when it's on the top, and once you see that certain candle, you can now ride the market downward based on that candle. Okay, it's gonna be pretty interesting. I'll make a note of myself to train you guys on that next week. Okay. All right. So long position is that tool that I use right here. I stretch it out, give me my ratios, and yeah, and then you place your trade through your trading platform. All right. One of the trading platforms I use is Henkel Trade. So I'll put a link in the description, or you can go to my website, Metro FX Traders, and click on the broker and open up a demo account with Henkel Trade, the platform that I use to place my trades. Okay. And also, when you get really good at this, it'll be time for you to start, taking some funded challenges um, through companies that allow you to trade for them. By you passing 2 phases, they'll give you a funded challenge, and then they'll give you a profit split based on a live account. Okay, because the first two accounts are demo accounts. They want to just test your skills to see if you're actually knowledgeable enough to get a real account. And once you get that real account, they'll share the profits with you, and you'll be able to grow that account to as much as you want. That's always a good thing to, get. Once you get good enough to trade on a demo account, you might want to try a funded account. You might want to try a live account for yourself with as little funds as you have, and then scale it up going forward. But again, check with your financial advisor before you take my advice, because I'm only sharing what I do, because that's what I did. Opened up a Henkel Trade account, practiced on the demo account through that platform, got the Trading View platform as well to mark up my charts and try to analyze the market. And based on my analysis, I do my analysis on Trading View. I place my trade on Henkel's platform, and I put my parameters inside of Henkel, my stop losses, my take profits, and so on and so forth. And but yeah, definitely consult with a financial advisor, someone who can advise you on what you should do. This is not financial advice. Disclaimer: I'm not telling you what to do, how to do it. I'm just sharing with you what I do. And if you want to implement practice what I do, I encourage you to, you know, get TradingView. At least it's free. All right, get TradingView and try to analyze the market based on TradingView, and try to, practice on a demo as well. Because TradingView has the ability to get a paper account. So let me close out of this here. Log out. And if you come all the way down here, you see paper trading, broker simulator by TradingView, broker simulator by TradingView. This is a paper account. Okay, and OMG, I placed a short trade on Bitcoin. Oh my goodness, it's a practice trade. It's a paper trade, remember, 10,000 units. And look at that crazy number. Wow. Wow, 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 wow. This is one of those set and forget trades. And it's actually, wow, going in my favor. Unbelievable. All right, anyway, I just don't even want to share that with you guys. I just wanted to show you that you can actually um, get a paper account through TradingView. And but yeah, that was exciting to see. Had that been real money, buddy, I'd be on a tropical island right now. That's how you get good. That's how you get good, right? But that was exciting. But that's gonna conclude my training for this week. Come back next week if you like what you hear. Again, subscribe, subscribe, subscribe. Um, reach out to me, send me an email, say, hey, send me a copy of the. If you want a free copy of the book, let me show you. Free copy of the book. I'm going to show you how to get it. Go to my site. Okay, Metro Traders, Metro FX Traders, and there's a link on my website to get a free copy of the Candlestick Bible book. Okay, a PDF copy of it, and I'm giving it away for free. That way you guys could actually learn and read the book itself. And it's right here, free ebook on understanding candlesticks. Once you click this right here, it's going to take you to a landing page. And this landing page, sorry, my internet is lagging so much for lightning speed internet. But anyway, once it pulls up, once you click that button, it's going to encourage you to put your email address. That way I know where to send the ebook. So that way you guys can get a hard copy of the ebook and you can read it at your leisure. But you can also go to my website, Metro FX Traders, and get the audio version as well, and have the female, the woman who's reading the book, read it to you while you're doing your chores at home, driving in your car, make your car a university of knowledge by listening to audio tapes. Yeah, so that's definitely what you want to do. But it's not pulling up, and I do apologize for that. I gotta check to see what's going on with my internet connection. But yeah, the clickers, the buttons right here, free ebook on understanding candlestick. And once I'll send you a copy of the hard copy of the book. All right, so thanks everybody for watching the video. You guys are awesome, and I appreciate your time. Share, like, and watch the video more than once. The strategy that I shared with you with just one candlestick, okay, which is a bullish engulfing candlestick, can profit you tremendously if you know how to use it well, if you know what you're looking for. But also anticipate that it can go against you as well. So there's always going to be a risk when you place a trade. But you know this. Thanks for watching. Have a great trading week. I'll see you, or you'll hear from me next week, Saturday, around this time. Bye for now.